Hey everybody, Smart Silver Stacker here. On Monday, we saw the price of gold pull back following some comments that Jerome Powell made at a Wall Street Journal live event. And I thought that the comments were actually pretty interesting, especially when you look at how the market reacted. And so I wanted to share those with you and go over what Jerome Powell said at this event. And this is an article over at Kitco that kind of details what he said. In regards to the Fed getting more aggressive in its fight against inflation, Powell had this to say. What we need to see is clear and convincing evidence that inflation pressures are abating and inflation is coming down. And if we don't see that, then we'll have to consider moving more aggressively. If we do see that, then we consider moving at a slower pace. It's going to be a judgment call that we make going forward as we carefully monitor incoming data, the evolving financial conditions changing. And he went on to say, inflation coming down, that's what we really need to see. If that involves moving past broadly understood levels of neutral, we won't hesitate at all to do that. We'll just go until we are at the place that we can say, yes, financial conditions are at an appropriate place and we see inflation coming down. We will get to that point, but it's not a stopping point. We don't know with any confidence where neutral is. We don't know where tight is, particularly in this environment of high inflation and very strong growth in a really tight labor market. And then Powell even acknowledged that he was kind of happy to see markets selling off. He said, it's been good to see financial markets reacting in advance based on the way that we're speaking about the economy. And the consequence is that financial conditions overall have tightened significantly. What we need to see is growth moving down from very high levels that we saw last year. And then he mentioned the typical inflation scapegoats that we always see, the war in Ukraine and the COVID-related shutdowns. And, I'm not saying that those things don't have an effect on inflation, but it seems like Powell and certain other individuals always want to mention those, but they never mention the role that monetary policy has to play in inflation. We're going to talk more about that in just a minute. When Powell made these comments, the markets did interpret this as pretty hawkish. Gold pulled back in price as a result. And then Powell had another pretty interesting warning. This is actually, I thought, the most interesting thing he said at this event. He was warning about the reversal of globalization and how that could lead to higher inflation. This is what he said. It would be a very different world if we see globalization go into reverse or pause. You had a perfect storm of disinflationary forces. And he's talking about the advent of globalization over the previous decades. And then he went on to say, in the near term, there is a real possibility that globalization go into reverse to some extent. You would have more security in supply chains, but they may not be as efficient. You could see higher inflationary pressure. And so what he's talking about is, we have these very complex supply chains in the global economy, and they are very efficient, but they are also very fragile. And, to give you an example, let's say that I have a factory and I'm building, cog machines, and I need widget A as an input for that. And I can order them from over in China and they'll get sent to me with shipping and everything, and they cost $5 each. And so that's what I do because that's the cheapest place to get them. But then there is, say, a shop in my town that builds cog A's, but, building them in the US, maybe they're a little bit higher quality, but they cost more. There's more regulation. There's more expense, whatever. They cost more at the end of the day. So they're $15 a piece for my local shop. Well, if global supply chains become disrupted because of, war or pandemic lockdowns or what have you, well, now I can't get the cheaper, more efficient piece anymore. Now I have to order it from my local supplier. And while that is more robust, it's less likely to be disrupted because, hey, he's in my town. I could walk down there and get him if I needed to. It's not as efficient. They cost more. And so now I have to, pass those cost increases on to my customers. And that leads to higher prices. And, I've been thinking a lot about inflation lately and how factors like this can really lead to higher prices. There's that quote from Milton Friedman about how inflation is always and everywhere a monetary phenomenon. And I've read that quote in videos in the past. And, I do think that there is an element of truth to that still, but my thought process has kind of changed on that lately. I know if you go by the old definition of inflation, the one that you'll find in a dictionary from, say, 1971, inflation is actually defined as an expansion of the monetary supply, and then prices are higher as a result. The modern definition of inflation is in fact the rising prices themselves, and that's how most people use the word. And obviously there are a lot of other factors aside from monetary policy. Monetary policy is important, But there are a lot of factors that can affect prices in addition to that. Supply chain disruptions are just one example. We're seeing that right now. And that's not a monetary phenomenon, but clearly it can put upward pressure on prices as supply is impacted. I know a lot of people, when they say inflation, they are actually referring to those prices. So just some thoughts I've had on inflation lately. I know people get hung up on the definition sometimes, what you're talking about exactly, but clearly we are going to see inflation moving forward as a result of both the monetary policy that we've had and the monetary policy that, in my opinion, is still fairly accommodative, but also as a result of, these changes in the way that the global economy functions as far as supply chains. Now, as far as gold falling after Powell gave these talking points, in my opinion, I just say, hey, thanks for the sale, because I do think that this is all just jawboning on the part of the Fed, trying to get markets convinced that they are, in fact, serious about their inflation fight. I think that if Powell was actually serious about getting inflation under control, he would already have been getting a lot more aggressive. This is the schedule for the 2022 FOMC meetings, and as you can see, we've got 5 more remaining in 2022, and it seems like the Fed plan so far is a 50 basis point increase at each meeting. And of course, that could still change, but that is the trajectory we're on. And let's say that that is what happens. We end up with a federal funds rate of 3.25%. Now, how that is supposed to fight an inflation rate of 8.3% year over year, that's beyond me. If you hold cash in that scenario, you have a negative real return of 5%. Is that supposed to discourage people from spending and to encourage them to start saving? Is a negative 5% real yield enough to do that? I don't think so. And that's really what you need to do to get inflation under control. But honestly, I doubt that the Fed will even be capable of getting rates that high without either having to slow down or reverse direction entirely. Keep in mind, they haven't even started quantitative tightening yet. In June, the Fed is going to start selling treasuries and mortgage-backed securities that it holds on its balance sheet. And that is going to put upward pressure on the rates on U.S. bonds. It's going to put downward pressure on stocks. And we've already had quite a bit of pain from the modest increase in rates that we've seen so far. So I wouldn't take Powell's commentary too much to heart. I think it's quite unlikely that the Fed is going to get any more aggressive on inflation. If they were going to do that, they would have already done it. But his commentary on how a reduction in globalization will lead to higher prices, that part I think is actually spot on. And the trend toward higher prices and even outright shortages of goods that depend on global supply chains, that I think is going to become the new normal. So what do you think about Powell's comments? Do you think that the Fed has the guts to get even more aggressive against inflation? Or do you think, like I do, that when their tightening triggers another financial crisis, they are going to reverse course and print? Let me know in the comments below. Thank you all very much for watching. I'll catch you next time. Smart Silver Stacker